Amazing day, amazing day. 2025.
Amazing New Year.
Come
Grand
on,
rising,
amazing
grand
new year.
rising.
Grand
Hey,
rising,
so
amazing new year.
only for success, abundance of love, health, and strength. Yeah,
Gee.
unity,
Say it again. Say it again, sister. Say it
an
again.
abundance of love, an abundance of health, an abundance of success. To the Unity family, here we go,
Thank you, thank
2025,
you,
activity
thank you.
time.
Jeez. All right, listen, I'm recording. It's all recorded. I think that one's gonna be played over and over and over again. Amazing, amazing, amazing 2025. Amazing. Yeah, guys, I hope you had an absolutely fantastic Christmas. I hope you had a nice new year. I hope you ate lots of food. I hope you had a time to reflect. I hope you had a time to think about, what 2025 is going to hold. I hope you've already started to action your 2025. Lots and lots of things are going to be going on in this year, and it's lovely to be back. I think I'll go as far as saying I miss you. I missed our breakfast clubs, our mornings, our chats, taking to the trust. But sometimes it's good to have a break as well, guys. Sometimes it's good to have a break. Sometimes it's good to, do the things that you haven't been doing, whether that may be, just taking your time in the morning, chilling out, having a little lie-in, etc. But it's green flag again. It's ready for us to start moving forwards and start achieving our goals and our targets and writing down our, different, goals for the year, etc. We're going to do a session on that, session on how we can attack the year and, a kind of how we can design our lives. We're going to do a session on that. I think we'll do an evening session, hopefully this week. All right. There's going to be lots of different things happening, but we're just going to get into it just as we was last year and make sure that we're all sharp and refreshed and understand how we're going to tackle these markets, making sure that we haven't forgotten about our strategy, making sure that we, I put something in the group. Let me see if I can find the image. All right, I put something in the group. So let's get rid of all this, pal. I put something in the group, and it was this image here. It's going to open up for me anytime it feels like it. There you go. Have a look at this image. And this is an image where, of course, we understand we can take losses every single day. We understand that. But this is to show the bigger picture, all right? To show that from something that we're learning, if we could make £20 a day from it. So them times when you was £200 up in profits and, you didn't know whether you should take the money or not take the money or what you're going to do, etc., etc., etc. This is showing, in a 252 day trading. Of course, this is just an example, all right? And it oversimplifies certain things. £20 a day gives you an extra 5K for the year. All right. That's your hobby, and learning how to make £20 a day. Yeah. Even out of your real account. Okay. £100 a day brings you an extra £25,000 in a year. All right. If you can get a large enough account, all right, whereby you're making £500. Now, look, obviously, you're not going to make £500 every day. All right. You're not going to make £100 every single day. But this is just oversimplifying and showing you that from this amazing skill that we've learned, even at £20 a day, it's going to put an extra 5K. It's going to pay for that holiday, that family holiday. It's going to do something great. It's going to allow you to invest 5K back into yourself, making £20 per day. All right. And it's just nice. It's easy to see because sometimes we forget. Sometimes we're looking for those big wins. All right. There was something else I put in the group, and it was about Tuesdays. All right. And essentially what it spoke about Tuesdays, all right, is we are always chasing these big wins. People generally chase these big wins in like buying a new house, buying a new car, making a gazillion pounds out of the markets on a Wednesday, chasing those moments in life. But the reality is those moments make up probably 10% of your life, 15% of your life, those moments. You're not constantly buying a new car every day. You're not constantly buying a new house every day. You're not constantly going on that dream holiday every single day, 365 days out of the year. more times out of the year, it's a Tuesday. It's a normal day. And what we should all be seeking, you know, when I heard it, it just resonated with me. Is that because there's a lot of people out here who they live their lives trying to escape their lives. So their life's terrible for the whole week. And then on a Friday night, they're trying to escape their life and they go out and they get absolutely levered, yeah, out in the club or whatever it may be, or, you know, people who start the week and they can't wait until this Friday, or people who are talking about Christmas in September, you know. It's like, it's about being happy with the Tuesdays, being happy with the ordinary days, happy with what you do, your routines when you wake up on a normal day, not on those magical one-off events that happen, you know, 10, 15% out of your life. It's about being happy and understanding how we can thrive and how we can take advantage of the everyday. Yeah, that little picture just a minute ago, being able to take the 20 pounds a day, is being able to understand what we can do on an everyday basis. Of course, there's going to be some days when it's 300 pounds, 800 pounds, a grand, 2 grand out the markets. But how do we adjust our lives and learn these skills and do certain things so that we are happy with the Tuesdays? I'm telling you, we live in a life right in a world right now whereby they celebrate this 10%. When you go on Instagram or whether maybe you're seeing this 10%, guys just bought a new car, just bought a new house. But how do you get happy with your reality? How do you get happy with your, is it the case that you wake up in the morning and you go to the gym? Is it the case you've got good habits? Do you have great conversations? Do you start the day with the energy that I heard Sister Abana start the day with today, giving blessings with a smile on her face and knowing that she's got a community and she's got a family here? Does that put a smile on her face and make her ordinary, her Tuesdays, a good day? Because there's a lot of people, like I said to you, that are trying to escape their lives. But the point is that it's your life. You got to make your life good. You can't be living for the escape and then coming back to the ordinary for 80% of your life. You've got to make the 80% amazing. All right? And that's what we're doing every single day by learning these skills and understanding what's going on. So what we're going to do today, coming back 2025, because we had all of that energy first thing, making me feel fantastic, is we're just going to go and recap, make sure that we haven't got rusty. I know for a lot of people, they've probably been left the charts alone, had a little time, and that is fine. That is perfect, in fact, because there's times you have to take a step away, all right? If you're an athlete, you don't constantly train. There's time when you must rest, all right? Because your body breaks, okay? And now we are back. We're back to training, back to getting in these markets and understanding what's going on. So we're going to start like this. We're going to go through our charts and we're going to understand some ways in which we set ourselves up to understand what we're going to trade, all right? How do we do that? Well, we've got some different little techniques, different little flexes that we use to understand where the market may be going and to color our decisions, to add some confluence, to add some reasons why. I said to you something at the end of 2024. I said, whenever you're going to take a trade, I need you to ask yourself, why? I need you to say, why am I going to take this trade? If you cannot answer why definitively, because it's just broken structure, because the market is this direction, because blah, 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 because blah, 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 you know, you shouldn't be taking a trade. Okay? And it's something that you can attribute to life. Before you go and make a decision, ask yourself, why? Do you really need this thing? You know, do you really need to go here? Is this something you really need to do or want to do? Ask yourself why. Because a lot of the time, we do things based upon autopilot or based upon emotions. You know, we feel like what we should do is go and, you know, do this, you know, go and slap this man in his mouth. But if we sat down and think to ourselves why and really took into consideration the consequences of our actions, a lot of the time we wouldn't do that. Yeah, and we'd live to fight another day. Okay, if a lot of the kids right now that were finding themselves on the streets, you know, doing certain things, just took a breath and stopped and asked themselves why and considered what they was going to go and do, there'd be a lot less of this emotional behavior that we're getting from our young men, emotional behavior that we're getting from our women. To stand and to say, you know, why am I going to do this thing? All right. So let's look at these charts. So first, we're going to go through, you know, a list here, which is just a list of different markets, and I'm going to wipe these charts. I don't want to see no 2024 on my 2025 energy. Okay. So this here is our JER 30. All right. Our DAX. Okay. And you know what we can do first and foremost is this. We're going to open up these charts, but before we get busy and start looking into these charts, we're going to just go in here and we're going to go and have a look at our economic calendar. All right. So we want to have an overview to understand what may or may not be happening today. So at least we've got our eye out on certain times of the day whereby there may be some sort of events, fundamental events that may affect, okay, our trading. All right. So, for example, today in 7 minutes at 8:45, there is S&P Global Services, i.e. PMI, that is happening in the euro. All right, which is high impact. So that means if I'm trading and I'm looking at a euro pair, I need to be aware that in the next 6 minutes, there may be some real volatility. I can't be taking a trade now and then the markets go crazy. And I'm wondering why is it going crazy? What's happening? Yeah, I'm trying to move my stop loss and I'm thinking to myself, this is a little bit, and I'm doing madness and I'm acting out of emotions when I haven't understood that, there is a whole heap of red folder euro news that are coming out within the next, let's just say, half an hour. All right, so we may see certain markets or Euro USDs or GBP USD, even though it's, we're outside of the euro, we are still affected. We might see some real volatility entering those markets. So we're going to either stay away or we're going to at least have it in the back of our mind that that's what's going on. Look, that's an immediate bit of information that we need to know if we're going to trade the markets, especially anything close to euro pairs. All right. So let's, for example, go and look at Euro USD. All right. Let's go and find our Euro USD here. And this look and see, let me delete everything off of it, what may or may not happen in the next few minutes. All right. What may or may not happen. Now, you guys should know that I'm top-down analysis. What does that mean? I want to see the markets from, outer space first to understand what it looks like. And then I want to make some decisions as I zoom in. All right. So say, for example, this is our Euro USD market. And even though I'm going all the way back here, zooming out to 2007, which may not immediately assist us in taking trades today, all right, or taking trades immediately right now. Just because I'm going to look at this market and say, yeah, look, from 2007, we're day traders. So we're very interested in what's happening in the day, today, okay? However, we can still definitely be able to review and understand what is happening on a bigger picture. So on a bigger picture, our Euro USD has been bearish. Since 2007, 8, we can see that the euro, okay, has been losing strength against the United States dollar, making lower lows and lower highs and lower lows and lower highs and lower lows, and we're into a lower high at the moment, okay? So is this market going to continue doing that? Well, I believe so. I believe the market's going to continue doing what it has always done until it decides to start doing something else. But until that point, I might as well go with what it's been doing. Okay? I might as well go with what's been happening until something else starts to happen, and I can use that information to make better decisions. Okay? So we can see that the market here, on the bigger picture, has kind of been trading within this little area here. Yeah? We've kind of been trading within that little block in here for some time. All right? Because I'm on the weekly at the moment, meaning that every single candle you can see here is a week in time. All right? Keeping my eye on the clock because there is some news happening in the next 3 minutes. All right? So we'll look. Hopefully we'll get our analysis done before then. All right? Dropping down to our daily time frame, we can see how this market here is a little bit clearer now. This sideways energy. It's a little bit clearer how this market has been going sideways in here since 2022. All right? 2023, I'd say. End of 2022, 2023. The market's been in here trading within this range. Okay, we can see this clearer on the daily time frame. Now, one thing on the daily time frame is we look to see if we've got outside bearish candles, to see what was happening on our last, days. How was the momentum, on the last trading day? Now, in this instance, we can see here on Friday, because Forex markets are Monday to Friday, all right, that we had a green candle, which wasn't an outside candle, it was an inside candle here. But what that candle was doing, from what I can see, was closing up some previous imbalance. Was closing up some previous imbalance that happened on Thursday. Because on Thursday, the markets were kind of pushed outside of this range, which is kind of like this. Like I said, we had a little wick action before, but the markets pushed, we've seen down here, but we didn't close below this level, pushed outside here on a Thursday. Let's look over here. You can see the date. On Thursday, here on the 2nd of January 2025, okay? And then we saw on the Friday, the market come and was not happy with the imbalance, the inefficiency, okay, that occurred in this market on a Thursday, all right? And if we was looking at this chart on a Thursday, we would be saying that this market, even if it wants to come down, may look to close the imbalance first, all right, before making a red outside candle. That's what we'd be saying to ourselves. We'd be saying, look, this is an outside candle on a Thursday, closed outside the range of the previous candle. However, the market may wish to be bullish first before deciding it wants to come down here. So I would be interested in buying this market into the imbalance, and depending on what time and how aggressively and what news is happening, seeing whether or not there's going to be some sort of entry to get in for the sell. But the buy would be on in regards to closing this imbalance. All right. What actually happened is the market pushed up in here and got to 50% of that imbalance. Yeah. And by the end of the day, so therefore, by the end of the day, I wouldn't be interested in doing anything because the market hasn't, it took all day to get to 50% of the imbalance. But if I was able to get in here for a buy, it would have been a great trade. It would have been a great trade to the tune of, if depending on where I got an entry, okay, loads of pips, nice 50 pips on Euro USD, which is a lot for Euro USD. Okay. Now, what we've seen happen today, because this is Friday, Monday, the weekend has passed, and this market currently is not an outside candle. It's not giving us any type of, information in regards to the previous momentum. All right. So that doesn't get any tick for me in the confluence box. I'm not ticking that saying, yeah, this is what's going on. Yeah. But we've seen at the moment the markets continue to push up to close this imbalance fully. I do not know if this market wants to continue pushing up here at the moment. I don't have that information looking on a daily time frame. Okay, all I know is that there was an imbalance here. It only got 50% closed on Friday, and now so far it's come up to close it 100% of the way. Okay, that's all I know. Now, if I drop my time frame down to my 4 hour, I can see how that market just kept pushing after making that imbalance. After pushing down here with some big red candles, I can see the market has said, no, we need to close that door. There's lots of draft coming through. We need to close that door. That's what I can see has happened. All right. Now, what I want to do is I want to drop down further and understand what's happening from a bit more of a micro. So I haven't got those confluences. So I really don't love this trade. I don't love it. I'm not in love with it because I haven't got those confluences to understand what's happening in the momentum, etc., etc., etc. What I want to do, let me go back, in fact, on a smaller time frame, because I just looked at it before on a weekly, and we put in some lines. On a smaller time frame, looking here, we can see how this market has been. I'm putting in the lines so you can see pushing down like so, bearishly, okay, since since it's been in this consolidation, but this energy at the moment is in this bearish range, which I'm going to make a different color so that our eye immediately can see this little range it's been trading. All right. So even though the market was, have a look, zooming out, going sideways in here, this is the range it's been pushing down that's finally kind of broken outside of that box. Now, it might want to come all the way back up in here and do something. Yeah. This might just be grabbing some liquidity below these levels, and the market wants to start doing something crazy and breaking structure up here because there is liquidity above. Remember, above any consolidation or below any consolidation is liquidity. And what is liquidity? It's a pool of money. There's a pool of money up here, and there was a pool of money down here below this range. Okay, so right now this market's just taken or tapped into that pool. It kind of tapped into it over here, to be fair. This pool of money. All right, and it came back up here and it came back in here. It's kind of giving me energy that maybe wants to keep getting bearish. I don't know for facts. Okay, but what I do know when I zoom all the way out of that bearish EU market is that we're at near the top of this range. And in any market near the top of the range, we understand that near the top of the range, the market is expensive. And therefore, it's about sells. Why is it about sells? I don't know. Historically, that's what it's been about. Look, every time we've got near the top of this blue line, it's been about sells. It's been about sells. It's been about sells. Near the top of this blue line, it's been about sells. Near the top of this blue line, it's been about sells. So we're back at the top of this blue line. I don't know. I'm just going to say it's going to be about sells. All right? Now, I may be wrong. The market may decide to say, nah, it's 2025 and we're doing something completely different now, mate. But until it does that, I'm going with we're going to be about sells. And from here, the market has been selling off. Now, the question is, are we going to continue selling off to start breaking some larger structure, to start trading down within this blue range? I don't know. But as a day trader, all this energy down here is not what I need to really worry about. We're not getting down here today. All right? I need to zoom in, look at what's going on a daily, and then zoom in further to understand today what opportunities are there today. If I'm saying that this is a range, or this market's been making some, been trading down within, all right? And let me draw this a little bit better. I'm going to push this kind of like this, all right? Kind of like this, all right? That this is a range this market's been trading within. The question is, what is it going to do next? We've already identified that there's some imbalance that needs closing. So the market's ultimately closed that imbalance 100%, all right, this daily imbalance. On a smaller time frame, can I see any type of confirmations, any confluence, anything that's telling me that maybe now wants to turn around and keep coming down? That's the question. That's the question. Remember I said to you, we've got to ask ourselves, why? What's going on? Constant questions. So the new question I'm asking myself is this showing me that since it's closed this imbalance, is it showing me, is it giving me any type of energy that it wants to turn around? All right. So on a smaller time frame, you can now see my little indicator kick in. And my indicator is showing me the sessions. All right. The different sessions. So say we can see Asian session was here. Okay. Asian session was here. Obviously. And this is from last night, 1 o'clock, all these kind of times here. We can see the market has pushed up plus Asian session. And in my opinion, where we are right now is tapping into a previous battlefield. All right. And what do I mean by a previous battlefield? I mean a previous area where the market couldn't break. It was here, look, smash, I couldn't break it. Let me show you, I might draw some lines. Couldn't break this place here. Couldn't break this place here. I couldn't break this place here. And then I mustered all of my friends, my family members, all type of people to come and get involved. Yeah, all our big weapons. I brought out the tanks. Yeah, the grenades, everything, and I pushed through this level with strength and speed with a big red candle. This one here, smash through this level. Yeah, and then proceeded to continue that bearish momentum, making lower lows, lower highs, lower lows. The market has now traded back up, and we are currently tapping into that previous battlefield, that previous area whereby there had to be strength and speed smashing through this level. That's where we are right now. Okay, that is where we are right now in this previous battlefield. And I've given you guys lots of different metaphors and analogies about what that means. It means, sometimes you come back to that battlefield and you want to check to see that you haven't left any insurgents still alive. Maybe you want to come and collect some of your compadres, some of your people who you was fighting with. You want to pick them back up. Are you okay? Sorry, the battle happened. And once you've done that and you've come back into this level, cleared this threat of where previously there was all of this, this insurgents, this opposition, then you might decide to continue on your way. But I can't just hit the button for a buy or a sell. I have to get confirmations. So though we've hit, this was the Asian session, London started, London pushed up bullishly, and now in this previous battlefield, I need to see. I wasn't able to get the confirmation from the daily time frame, so I already marked this trade down. It's already not something I'm overly excited about. We've seen the news hit now. Yeah, we've just got our news has just hit whilst I've been yapping. All right, at 8:45 and 8:50, we've had this news hit. This was in line, well, a little bit higher than what the consensus was, and so was this here. And this says a better than expected result, plus 0.4, plus 1.1. They've changed the way they're describing this information, it seems, in 2025. But you can click into here and see what the PMI means and what a better than expected result can mean for the markets. Because when we click in, we can get some information to understand what is PMI. And here you can see here it says a higher than expected figure should be seen as positive, quote unquote, bullish for the euro, while a lower than expected figure should be seen as negative, bearish for the euro. Now, that's not the be all and end all, okay, but that's giving you an overview. If you were trying to do some real research into PMI, you could take this information and then you can check it for yourself. How? By going to the history and plotting the date on your trading view and seeing what happened when it was worse than expected, when it was better than expected, when it was worse than expected. Was there any type of reaction? Did it need a certain percentage above what they thought it was going to be, the consensus was? Did it need a certain percentage above or below this number to have a certain effect? You could get deep on it like that if you wanted to. The information is there. There's no reason for you to be like, I just don't know. Here, we've got another PMI information coming out in 1 minute. Remember I said for the next half an hour or so, Euro looks extremely active. Look at it. After PMI, we've got CPI stuff coming in. Yeah? So I'm talking about looking at this market and seeing what's going on till about 9 o'clock, 9:30. All right? Because we can see it's extremely active. All right? So here we can see here in the Asian, going back to our charts, Euro USD, we can see that the Asian session here was just ran through. Liquidity was taken from above the Asian session. Remember, today's Monday. Today's Monday, so this London team, all these London traders have just sat at their desks. The last time they was at the desk was on Friday. And on Saturday, the world was still spinning. On Sunday, the world was still spinning. And for all we know, there's a reason why this market wants to be bullish, yeah, and Euro to be gaining strength. Maybe it's coming from our economic data. It did say better than expected results is bullish. Maybe that's why Euro's been gaining strength. Who knows? Maybe they've already known it was going to be bullish and they've priced it in to get up into these levels to then get back with the program and continue being bearish. We do not know. If you think that you know everything straight away, well, then you're wrong. You don't know. But what you can do is you can make educated guesses, which is what we do in trading, probability based upon previous patterns, based upon fundamentals, based upon seeing things that we've seen that gives us some information. For example, this push-up here, London push-up, has also taken liquidity from above a previous New York session. This is me reading the charts. This liquidity that was here has been taken because this New York session, before had a ceiling, which was here, and the market's taken that ceiling, the liquidity from above these levels, and continue to push up into a previous battlefield, as I said. Now, I can see there's some other liquidity. Have a look. There's more liquidity above this London session over here, which I can mark out if I want. Have a look. Liquidity. We know that the markets are drawn to liquidity. All right? They're like a magnet. The market wants to go and take those pools of money. That's how the market gets its fuel to do what it needs to do, by coming and taking our liquidity. So we understand it's a magnet to price, but the market still has an agenda. It's like, yeah, there's liquidity up here, but we can't keep going all the way up here just to get Jay's liquidity. We've got bigger fish to fry down here. But we must be able to identify these checkpoints, these points of interest. All right. So when the market starts to do something, we look at, okay, it doesn't want to go down no more. It's probably going for this next milestone. All right. So right now, what I'm looking at in this Euro market is now we've tapped into this previous battlefield. Is this market trying to reach all the way for this liquidity up here before turning around? Why do I think it's going to turn around? Because on the bigger picture, this market has been bearish. Yeah. On the bigger picture, this market has been bearish, making lower lows and lower highs and lower lows, and I'm expecting a lower high. Can it decide to change and do something different and break this structure? Well, yeah, of course it could. Can do it once. But at the moment, I'm going to say, you know what, the market's going to continue doing what it has always done, yeah, until it does something else. Because if it breaks this structure, then I can reassess. But until then, I'm saying, okay, well, this market has pushed down here, and now we've made a retracement that's been closing the imbalance and happens to be tapping into a previous battlefield that also happens to be, what does it also happen to be? I just pulled out a Fibonacci. Where are we currently kind of sitting in this area here? I just pulled out a Fibonacci from this high down to this low, wick low over here. And where are we currently Where are we currently sitting in this this impulse? Where's the market currently sitting? All right. The clue is this green line over here. Or maybe you can't see the numbers. All right. It's currently 50% of this impulse. So now I'm not trying to say just because it's 50% of the impulse I'm hitting for a sell. I'm saying it's quite a coinky-dink. It's a bit of a coincidence that this market has pushed down here, broken through some structure with strength and speed, made a retracement, okay? And that retracement of that previous battlefield of it breaking through that structure is currently exactly at that 50% level, okay? So I'm just thinking, that's just in my back of my brain. That's just me thinking to myself, okay, there's certain things that are aligning here, okay? Even though I haven't got necessarily my higher time frame confluence that I look for, which is my outside candles, we're currently in this previous battlefield that also happens to be 50% of the overall push down. All right, that overall push down has been since the 30th, the end of December. Yeah, push down here. Okay, and we're now 50% in that space. So, bearing in mind we've got all this news happening, all right? Bearing in mind I'm watching this, bearing in mind we're now at the top of this blue range, I'm wondering, are we going to see some sort of break-in structure around here, around this previous, and you see this previous battlefield here, though it's a line, you hear me tell you guys many and many times, there is no single price point. It's an area. It's just that the charts will start looking ridiculous if all of my lines were actually squares like this. It starts looking a bit mad. So this whole area is a point of interest. Now, if this market just continues to push up here outside of this blue range, my next thought process is, okay, we're going for the liquidity above here. And I will wait for a break-in structure after this liquidity has been taken. See, you get my point. After one idea has failed, because I've mapped out the potential, I've read the charts, and I've identified these other points of interest, I'll just say, okay, no problem, and see what happens here. I'm not going to start getting involved in the middle here. Not unless I see a beautiful indication, correction, continuation, and the market's tapping in the structure breaking. I'm going to say, okay, well, the market's going to do something else. You should be coming back to your house, yeah, unless you've got something to do. Yeah, when you leave the house, you're either going to do something, but when you've done doing that thing, you're coming back to home. So if this market right now is not coming back and doing what it's supposed to be doing, I'm assuming it's going to do something else, i.e. it wants this liquidity. So right here, I'll be sitting here looking at this chart, for example, and I'll be saying, all right, the market's been pushing up, breaking some minor structure here on the 5-minute time frame. Indication correcting higher high, higher low, higher high, higher low. We've come into this previous battlefield. Look, it's labeled over here. It's this whole area. And we're at the top of this blue range is what it's been kind of trading within. Is this market on the 5-minute time frame, or I can get smaller, but for the 5-minute time frame, going to start to break some structure? Is it going to come down here and break this structure and indicate and correct and continue? That's on the 5-minute time frame, that structure. On a smaller time frame, have a look at this. On a 1-minute time frame, all of this energy here looks like consolidation. Let me mark it for you. Let me make it a color that you can see. All of this area here, oops, on a smaller 1-minute time frame, whilst they was waiting for the news in euro, looks like the market was consolidating. And then it may look like then this nam was a liquidity grab above this consolidation area, and maybe this market now is going to get bearish. Okay, so on a smaller time frame, if I wanted to be more aggressive, I could be looking at, is structure being broken here? It's getting a bit difficult to see here, so I'm going to get rid of this yellow box and try to get rid of this yellow box. Okay, that wasn't the yellow box. That was the indicator. Why is the indicator so bright? Let me turn the indicator down. And this here, let me put it to 95. There you go. All right, so we've seen here that the market has come in here. In this market, if you look at it in the candlesticks, was kind of consolidating in here. Equal lows. So we know there's liquidity from below here. All right, we know there's some liquidity below these equal lows. And it was making these equal kind of highs. The market's just bust above that. Now on a smaller time frame, so this would be the 5-minute structure in here that I made a little line in here. But on a smaller time frame, this is some 1-minute structure. Okay, and we can see the market has just about wicked below this structure here, but we're not in the trade because we're waiting for confirmation of an indication of what it wants to do, a correction, and then a continuation, even on a smaller time frame. I don't care what time frame it is, the markets do the same stuff. Look at the market still powering up here. I wouldn't have been in this trade because it didn't give me the confirmation. That question about why I should get into this trade right now wasn't answered on a 1-minute time frame. It wasn't answered on a 5-minute time frame. Yeah, it wasn't answered at any time frame above it, so I'm not in the trade. And this previous battlefield, which is this area, have a look. I start thinking to myself that maybe the market doesn't care about this previous battlefield because it was in and around these lows in here. If I was to draw a square, make it a square, which I will delete, it was in and around this type of area in here was our previous battlefield. See? Now the market's pushed through past that previous battlefield. So I'm thinking, I was like, boy, maybe it's driving, maybe it's a Monday, maybe CPI, PMI is happening, and we're just driving for this liquidity first so we can see liquidity above this high and this high. Maybe. Yeah? Or maybe we're just getting this volatility off the current news. Have a look. Another bit of news just dropped here, a red folder news. 9:05, 9 o'clock here. All of this 9 o'clock news just dropped 5 minutes ago and being processed. Let's refresh these charts, this page. Yeah, and this information is coming out now. Maybe that's what's giving that extra bit of volatility outside of that previous battlefield. Either way, I am not risking my hard-earned monies until I've got a until I can answer the question why. Until I can say the reason why I'm getting into this trade, Jay, is because I saw the market tap into an area and it indicated, corrected, and continued, or it made a beautiful manipulation M and then tapped in. All right, I have to have that. And right now, look, the market's only going higher, making higher highs, higher lows, higher highs. Now I know what you're saying. You say, so Jay, why don't we buy it? Well, we can buy it, but the question is, if we're going to buy this market, where is this market going to, and where would we get in and put our stop loss? This is the question. We can't just say because we're wrong and the market was going up, well, we should buy it then. Well, if you buy this market and this market's only going, let's imagine you bought this market like this. You said, yeah, because it's going up, Jay, I'm going to buy the market here, I'm going to place my stop below here. Well, if this market is only going to here anyway, to grab this liquidity before turning around, if that's what you believe, then this is a stupid trade because here you're risking 1 to make 0.4. So you can't just jump in on the basis that, you can see the crowd running in this direction because you don't know where the crowd's going. You set up your whole plan, your trip, that you're going to go north, yeah? But what you don't know is that the whole crowd was only going 100 foot north to go and get drinks so they could go south, or so that they could go east, so they can go west. So you've got to understand, okay, cool, well, maybe I missed the journey from down here, coming all the way up here to north. I can't jump in now and plan my journey to go north because the crowd's actually going to go south. They're just pushing this direction to get a little, to visit get some refreshments. So you're better off going and saying, all right, guys, I'll meet you up here and I'll jump in when you're doing the south journey. All right. Now, like I said from the start of the day, I don't love this trade because I don't have my daily confluence. All right. Now let's go back to what I was speaking about, my daily confluence. And whilst this market's still here, I'm going to pop some alerts in if the market does turn around. But personally, the way this market's moving, I think maybe it's going for the liquidity that's above. Okay. I think maybe it's pushing up for the liquidities above. But again, we don't know. And it is Monday and we are playing catch up. But let's go back to understanding the daily confluence. And when I'm speaking to you guys about how to use these daily charts, all right, to understand what may or may not happen. All right. Now I'm going to just I'm going to do some back testing in regards to this. So I'm just going to randomly go to a week out so that I can't cheat. All right. And I'm just going to go like, a couple weeks in. Let's go a couple weeks in. There's a couple candles back. And I'm going to do that. All right. Now, the daily confluence is what we look for about these outside candles. Is being able to look and see what happened the day before. All right. I'm not going to use this day for this example. So I'm going to click back through a day. Look, like here, we haven't got an outside candle. This candle didn't close outside the range of the previous candle. The range of the previous candle, if you don't understand where that is, it's between here, that's the high, and here. This candle didn't close outside of that range in either direction. All right. So as well as market structure and where we are in the range, whether we're high or low in the curve, this is also an element that we must use. Click again. Again, this candle didn't close outside of the range here. Now, what does that mean? That means that if you wanted to, if this was something that you look for first and foremost before you start trading and you didn't see it, you're just not going to trade it until you see it. There's hundreds of other pairs you can trade. Well, I won't say hundreds, but there's loads of other pairs you can trade. All right? You just say, okay, didn't see what I want to see here. Cool, no problem. Boom. We see a big outside red candle. This is giving us some sort of our first bit of confidence that, okay, we've had a big red outside candle. What could happen next? That's the question that we ask ourselves. What could happen next? And as I've already said it to you guys, what could happen next is we understand that these markets, these Forex markets, hate inefficiencies. Right, let me delete everything just so we can focus on this. All right, I can put those back in. It hates inefficiencies. So as soon as we see this imbalance, yeah, one idea from having no ideas here previously, I had no ideas here. But immediately one idea that comes into my mind is maybe on the next candle, the market wants to close up this inefficiency. Where to? To at least 50% of the inefficiency. All right. So I'll be saying, you know what? Here's this market here. The next candle is going to open up here. This would be, I'm going to make this say open. Okay. This is the whole imbalance. Anything, if I was looking for a buy, anything below the previous, below the open, if I believe this market is going to close up this market, this candle here, at least 50% would be a good entry. Anything, let me say it again. If I believe this market may want to kick back in here, which is what I believe, that the market may want to come back in here. Anything below the open, which I'm just assuming is at the previous day's close over here. Yeah. Sometimes it doesn't. Sometimes it gaps up. Sometimes it gaps down. But I'm assuming it's going to be here. Anything below the open, I said at the open here, because the candle hasn't opened yet. When I click it forward, it's going to open. Anything below here would be great for a buy. All right. So let me drop my time frame all the way down to a smaller time frame here. And we're going to look at, oh no, sorry. Let's go back to the daily so we know what day this is. This is Wednesday, the 18th of December. Okay. I'm going to drop my time frame down here to 15-minute time frame. And now we're looking at to see what happens at Thursday. All right. Let me even go to, I'll just leave it at 15 minutes for now. All So we can see here we're still in Wednesday. We can see Asian session in here now on Thursday. All right, so we'll be sleeping now. Same as sleeping, it's Asian session Thursday. Still Asian session. All right, so at this point here, when we've seen this market come down here on a daily time frame, boom, it came down to this level. I'm looking at it that at the moment, the market hasn't come and pushed down here below the open, okay? But I'd be looking at this Asian session here. Right now, liquidity is just before I got to drop down to my 5-minute time frame. So this now is Thursday, the 19th of December. I'd be looking at this chart and thinking to myself two things. This market is either going to come and take liquidity up here and then push all the way down here, looking for some liquidity down here before pushing up, or this market is trying to close that daily inefficiency right now, okay? And I have to identify at least 50% of that inefficiency, because once that market's got to 50%, which is around about here, there's no guarantees the market is going to come and close up the whole area. We do see some big inefficiencies here, some previous battlefields here, but I'd be watching this market thinking to myself, okay, have I got an indication correction continuation in regards to the market's made a lovely manipulation pattern after taking this liquidity? Or is this market going to continue pushing up to close this imbalance? All right, let's have a look and see what the market does. All right, the liquidity was taken. A London session started here, pushed up, it took liquidity from above Asian session here, tapped into a small previous battlefield here, which is at the 50% level. Yeah, on a 1-minute time frame, we can't see no manipulation end patterns. We can just see a reaction. Yeah, we can just see a reaction from that level when the market started pushing down in here. Let's go back to our 5-minute time frame. And I'm still worried right now whether this market is going to tap in here and come and close above here, because it hasn't given me a manipulation end pattern, not on the 1 minute, not on the 5 minute. It has had a reaction to 50%, but I'd be concerned that the market wants to come and close back above here and continue pushing up bullishly. Let's see what it does. I don't know what it's going to do, but I'm watching it. Now, we've had a reaction to this previous battlefield, which was the Asian session high at the moment. And the question I'd be asking myself right now is, what is this market going to do? Is it going to respect this Asian session high, which you can see it had to break with 1, 2, 3 continuous green candles, which on a larger time frame made some imbalance? Have a look. On a larger time frame, this push to break the Asian session created some imbalance in here. That the market is now coming and tapping in and closing that imbalance. The question is it going to close that imbalance to continue this bigger journey, or are we going to continue pushing here? My gut says we're going to push back up in here, but I don't know. All right, let's have a look. The market's tapped in. Liquidity's been taken from up here above this Asian session high, and it's had a reaction from there. In my opinion, this market comes and closes up here. It's got no business coming back and closing above here unless it wants to go higher. Okay, if it wants to keep coming down here after taking liquidity, I should start seeing lower highs and lower lows. Now, on a smaller time frame, I have seen some lower highs, or so some lower highs here and some lower lows, but we came and hit into this brick wall of this previous battlefield. So there's another test, another question's being asked. Are you going to break through here? Let's see what happens. I don't know, by the way, we've just randomly gone backwards. Look, we're watching it. Why? I'm asking, why are we back up here? If we've kind of taken the liquidity from above the Asian session high and had a reaction, why are we back up here? What is up here for this market? Well, maybe this market is, as I mentioned, as we've been concerned about, just indicating, correcting, and continuing for it to continue closing up that imbalance. Maybe 50% ain't enough for it. Maybe it wants to close that imbalance properly. Let's see. Closure above. In my opinion, this market wants to push up some more. Okay? In my opinion, as mentioned, this market is in the energy of closing this imbalance. Okay? Now, whether it's going to go all the way up here or not, that's how I'd be looking at it. And I'd be looking for some sort of entry, whether or not I'm going to place my stop below here. I'm looking at the time as well. This is London session. I'm looking at the time, how London respected this level here, and the overall energy from London was bullish. All right. So I'm at least looking at least for London period, that this market may be bullish. Let's hit play and see what happens. Dancing around, coming back down into these levels. I'm watching it. Dancing around, came all the way down, back down to those the lows. Watching it. Doesn't look great at the moment, but we're still in the trade. All right. If I got in here, all right. Doesn't look great because we're at this 50% level, and the reaction we're having at the 50% level is a real conversation. It's a real argument of whether or not we're going to be bearish, whether or not we're going to be bullish. That's the concern, that at this 50% level, this whole conversation's happened. We indicated, we corrected, we continued, but we've come back down here. And the fact that we've come down here and kind of wicked below this level is why it didn't look great. I didn't have no problem with all this. This was just noise. But coming down and breaking below this little level, which is essentially the previous battlefield it had a reaction to, this little break here is a concern to me. So I'd be looking at this figure as I'd either be closing myself out of this trade early or expecting this trade to fail. Yeah, and that's not a problem if it fails, because I've managed my risk and I'm well within my risk. Either way, let's see what this trade does and see if we come down here and we get stopped out. Okay, if we do get stopped out, it means that this market it came down here, pushed, and it closed the imbalance 50%. It was happy with that, and my next energy would be that the market is now going to continue pushing down in this direction. That would be my next idea. All right, let's hit play, see what happens. Make it a little bit quicker. And that's us being stopped out. Yeah, and that's this market now. As we've been stopped out, has New York kicked in? Yeah, New York kicked in about here. This market we can see has come and it's pushing down here. All right, it's pushing down here and it's taken the liquidity below here, but it's indicated, corrected, and continue. On a larger time frame, have a look. Where is the price for liquidity? The price on a larger time frame would be down here. This market was falling to hell. Brrr, boom, and something stopped it here. So the price for the liquidity would be this market coming and taking this liquidity below here. All right, let's see what happens. We're dancing around. Is it going to take that price? Asian sessions in here now. We're now moved on a good few days. Boom, look how it took that level. Pushed into here. This was a grab of this liquidity below here. So let's imagine now, days have moved on now. This is Friday. And we're seeing this Asian session here. We know where the price is. All right. We know where the price is below this level. And we see upon, this is before Asia, this is actually before London kicked off. We don't know what news has happened. We don't know what's happened, but we saw this very aggressive spike down, grabbing this liquidity. All right. And then we've seen a reaction from here. Boom. Had this market just pushing up. The first place of structure that we can see here is this level in here. As this market indicates, corrects, and continues in here, we'd be thinking that this market is going to be bullish. The safest place we'd place our stop would be below here, is the safest place we place our stop, because this is a very aggressive wick down that the market could decide it wants to come back in here. The most aggressive place we place our stop, if we want to be aggressive in this entry, be below the last low, which is an aggressive entry. As we see London open up and continue its bullish push. Okay. Now the point, what we started off looking at today was simply looking at how we can use these daily confluence. In this instance of this particular example, it didn't do us the justice it needed to do. Could have been many reasons for that. It's December, it's Christmas time, there's no traders around, blah, 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 blah. Probably wasn't best that I rewound it back to December the 24th or whatever it was, 29th. Yeah. But the point is that it's a first point of confluence. It's a first point of, and I said, we could have looked at it and said, nah, we're not happy with that. All right. We're trying to make sure that we have the stars aligned before taking a trade. And that's not going to be the case in every market. Like, we're not able to go to Euro USD and the stars align. If the stars don't align with Euro USD, don't look at something else. If you're here right now, let's go to current time or current trade. And we're here and we're saying, I'm getting no information from yesterday, apart from this market maybe coming to close up this imbalance. And that's our first point of confluence. You don't need to look at this trade. Say, you know what? I don't like it. Say, I don't like, because if we looked at it like this from Thursday, here, this is coming back to our present time. If we looked at it from Thursday and we understood, have a look, the same principle that we saw these candles and we thought to ourselves, all right, it's not Christmas time, it's a new year now. We're back at our charts. Traders are back on their charts. We're seeing what's going on. And we saw a big outside red candle. And we understand, remember, this is very similar to whenever it was the December, the example that was back by Christmas. All right. But we'd be thinking to ourselves that anything below the open of this next below, we're assuming that the candle's going to open here. This is the previous one. That was all at Christmas. But here, anything below here would be a good entry for the buy to close up this inefficiency. And that alone frames your day of what you may want to do in your day. That idea alone frames what you may want to do on that day. Yeah? Do you get it? That alone says to you, okay, there was a big red candle previously here on Thursday. On Friday, if I could get in for the buy, that gives me an idea that maybe this market wants to close up this imbalance. Drop our time frame all the way down. Remember, that was Thursday to our 5-minute time frame. Let's try and see where the market opened up on Thursday, on Friday, sorry. So let's click, we're going to click through. Click through, click through, click through, click through, click through. All right. So this was Friday. So we can see here near to our yellow line, which I said was the open. That's 12 o'clock here, around about here. So the line is slightly off here. Anything below this line, if the market presents the opportunity, may be great for a buy to come and close this imbalance. That's the idea I have in my head already. Plus, we're at the bottom of Asian session lows. Let's see what happens. And we play it forward. Wow. Good morning, gorgeous. That's amazing. Thank you, please. Good morning, gorgeous. Go on, chat door, please. Yeah, sorry. My boys are coming in and showing that they can do splits. Fantastic. All right. So we're looking at this little range in here and we're thinking to ourselves, is this market giving us opportunity? Remember, this is Asian session. We're trying to do real life. I don't know, maybe you might be up trying to trade Asian session 2 or 3 o'clock in the morning, but more than that, you're not. All right. Here we go. We're trading within that Asian session range. It's just the Asian session range got a little bit bigger now. Have a look. Boom. Yeah. This here is coming close to German Open, Frankfurt Open, all right? And we understand that anything below this yellow line would be great for an entry, all right? You may not be awake yet, but either way, we're understanding that that market has pushed down below the entry here, and we could even see, I was going to say manipulation W patterns, but it's not that clean. So let me not reach, all right? Either way, we've seen the market push up in here. Now, London should open at any moment now. We're very interested in this area of imbalance, but let's have a look and see what happens when London opens. Still not open yet. Still not open yet. Just hit play. Hit play with more speed. We've seen the liquidity taken from above Asian session. Oops, sorry. Remember, what in the back of our mind, we've still got that daily energy of that market coming and closing that imbalance. So we're thinking to ourselves in the back of our mind. And now we've seen how the market, first thing on this Friday energy, which was from, this was Friday starting here, Asian session here. I just want to see where London starts. London hasn't even opened up. All right. So we've seen here that London has opened up here. Asian session liquidity has been taken. Okay. We've seen actually manipulation M's happening up in here. See manipulation M's occurring. Sorry, my chair constantly sliding down. And we're asking ourselves now, okay, is London from here going to start breaking any significant structure, show that it wants to come down here bearishly, or is it going to continue breaking with its bullish energy? Look at the bullish energy, higher highs, higher lows, higher highs. Shut my door, baby. All right? All right? Indicated here, took liquidity. The question is this market going to come down here and want to take this liquidity first before pushing up below the open of the day or not? Let's see. It's going to hit play. Let's see. Let me go to my candles. The market's pushed all the way into the Asian session range. Yeah, around about the 50% level of the Asian session range. And within London, we've had a reaction, which is breaking structure. Have a look. Within London, we had a reaction in here that pushed back up and broke this structure. So it tapped in all the way to 50% of this Asian session range, approximately, which is approximately here, where we saw the markets. If I get rid of this, we saw the markets kind of respected in here. Yeah. Came back up into here. The question I'll be asking myself now, within London session, I'm awake now, I'm ready. Yeah, we're up, we're trading London session. Is this market now going to show me bullish intention because it's respecting this 50% of this Asian session range? And look, remember I said the concern, where the concern was? Remember before, was this imbalance? I said this was the concern, this imbalance. Look where the market went and wicked into, right into that little bit of imbalance in there. So that's a tick in the box that the market's come and tapped into that imbalance. Then the market's pushed up here on a smaller time frame and started breaking structure. Is the market going to continue indicating correct and continue in London to proceed to close this imbalance? Let's have a look. Looks like it. Yeah, it looks like it. The market came up here, indicated. This is London session now. The market was here, pushed into this level here, made an indication like it wanted to come here, but then it tapped into our point of interest, our imbalance, yeah, which is all the way down here, and the 50% level. And then we saw the market indicate, correct, and continue. This market looks as though it wants to be bullish and potentially push up. And let's zoom all the way out. Push up to where? Potentially close up some of this imbalance. Yeah, at least 50% of the imbalance. Let me see, there's my little thing, I can't see it. At least 50% of that imbalance. Okay, let's see what happens. Go to our candles, and I'm going to play it forward on a 10-minute time frame. And we can see how the market has been moving backwards and forwards, pushing up towards at least 50% of this imbalance. Okay, remember on the bigger picture, this gray box is our imbalance. And I was saying that it would be great if we was able to get into anything that was below the open of that day, but the market didn't tap back into below the open. It just continued with its bullish energy. All right, so was able to get in here to this entry. Now, at this point in time, this is one thing I want us to remember as well for this year. I want you guys to remember how to make sure that you're taking your partials. Okay, so taking your partials ultimately means that, when you get into trades and you get to certain levels, you want to understand how to take 50% off the table. All right, now we've spoken about taking 50% off the table when you get to a 1 to 3, and then allowing the rest of your trade to run to a 1 to 10 level, if possible. But trailing the trade to if you see any major structure breaking, yeah, and then deciding to take the money off the table. Because remember, it's about taking money, yeah, and protecting capital preservation, your positions. That's what it's about, okay? So watching this trade play out right now, we're looking at it and we're tapping into that 50% level. And we can see that on a bigger picture, the market is simply closing up the imbalance that was created, yeah, on this Thursday. Yeah, it's created this Thursday. Now, if this candle, for example, closes here today as a daily candle, which we don't know if it is, but closes up here, I'm going to have the same energy for tomorrow. I'm going to think to myself, well, obviously, we're going to look at the bigger picture. We still need to look at the market structure, where we are in the range. But I'm going to think to myself, maybe the market wants to tap into here to close this imbalance, to push bullish. Now, the fact that it doesn't tap into here at London session when I'm at the computer is outside of my control. If I see it do it in Frankfurt, if I see it do it in Asian session, I go, oh, it's already done it and it's making its way. I may have missed that move. If I see it not do it and it gives me an entry, that's going to be my idea for the day. You see, what happened when we was looking at the other one is it did it in Frankfurt. And we're like, well, we wasn't awake to trade in Frankfurt, so we wasn't able to get an entry there. And this may be a trade where you say, you know what, I can't get an entry. But if, for argument's sake, I've seen this market here, the candle closes, outside of a range and breaks some structure, and I believe it's going to do certain things, I'll be looking at it like, okay, what is on the cards? What move is on the cards that the market hasn't already done that may allow me to get into the trade? And we're looking for this confidence. It's not good enough to think that you've got these these out of the box solutions to trade it. You don't have out of the box solutions to trade it. You have concepts and patterns, and there may be playbooks that you have that you look for. But if for whatever reason that playbook played out early, for whatever reason there was fundamental news came out, for whatever reason it didn't do what it's supposed to do in the time that you decided to sit down at the charts, you have to adjust, and you have to be in a position to say, you know what, I don't like anything. Today, in my entire list, there are no outside candles. In my entire list today, Monday, the first day back, if you want to say of the new year, January the 6th, there is no outside candles. That might mean that today I take no trades. That might mean that today isn't a day that I like the look of how the market's setting up, and I take no trades. There's nothing wrong with that. There's nothing wrong with the fact that today, Monday, you wanted to get into the markets and make a bag of money, that you was unable to do that. That it's not going to happen today, it's going to happen tomorrow. And this is the evolution of our trading, understanding that, I'm looking at the markets and, yeah, Jay didn't mark anything in here. There is nothing that I've really got my eye on. There was a GBP NZD little energy I was looking at earlier, yeah, and which was a kind of 7 out of 10, which made me about $200, okay? But apart from that, nothing's really tickling my fancy. Guys, let's have an amazing day. It's the first time day back. My chair is sliding down again. All right. Anything anybody wants to say? Any vibes, any energy? Anyone want to say anything before we finish up? Well, great. Listen, guys, have an absolutely amazing day. All right. I know you've all got work to do. All right. First day back to normality. All right. It's 2025. Yeah. This is going to be the year of absolute abundance, guys. I guarantee it. Yeah, I guarantee it. You put your heart and your mind towards it, that's what's going to happen. All right. But each guy has to have an absolutely fantastic day. I'm going to love you and leave you. I'm going to put on something edgy. In fact, I'm not. I'm going to love you and leave you on a closer session. I will be back here at about 2 o'clock to trade New York. All right, guys. Have an amazing, amazing